Okay, so we're prepared just in case the rain starts back up. This is Jeff Miltenberger. He's gonna be talking to us about some loan stuff in the rain.
Loans.
He didn't know today that we're gonna be outside and he's freezing, so thank you for being here.
You're welcome.
So I wanted to ask you, if someone is buying a house, a property, and they're buying it.
Do they need a good lender?
No, they just need like an okay one.
Oh, okay. I'm not interested then.
So can like if I was buying a home in an LLC or a trust or something like that, can you do a loan for that? How does that work?
You know, that comes up all the time, and as of like in the last couple of years, it wasn't possible. You'd have to buy the house and then do a quick claim deed into the LLC or the other entity. But now some new products have come out. They're called non-QM or non-qualifying mortgages. They just basically don't fit under the same guidelines as like conventional FHA and VA loans, which are more streamlined. These non-QM loans are amazing though, especially for investors. You can use bank statement loans, you use bank statements to qualify.
When you say bank statement loan, what does that mean?
Wow, that's a good question.
Well, I mean,
Dominic.
like, I don't know. Tell me what it means.
No, I appreciate that.
Also, I like
it's
that
good.
my
I'm
chair's
talking
yours.
mortgage lingo, and you're talking. Oh, wow.
There we go.
You're short. What were you gonna say though?
Bank statement loans. What is a bank statement loan?
So a bank statement loan is an awesome loan for self-employed. So if you're self-employed and you try like a lot of self-employed people do and you write off as much income as you can so you don't pay as much taxes, the upside is great, no taxes, but the downside is when you want to qualify for buying a home, we're looking at those taxes.
Right, they want to see a large amount of income at
Exactly,
the end of the year,
we need income to qualify. And so they came out with these non-qualifying mortgages, which is not a negative term at all. It's just a different version of regular conventional, but we use bank statements to qualify. So what we'll do is we'll get 12 to 24 months of your business bank statements.
So you're going pretty far back.
Yeah,
you want to see a good history of income.
You can do 12 though, Dominic, if you want. So what we usually do is ask for 24, and if we see like it ramping up, we might go to 12 just to use more income.
I got you. Because it balances out the average.
Exactly. Okay. So yeah, especially if it's a newer business, which is where we see a lot of this kind of loan is with newer businesses that just started off. They had good cash flow, but in their first year, they wrote off a bunch of stuff. We might switch to a bank statement loan and just do a 12-month or something like that.
So you got a bank statement. There's a lot of cars going. You got a bank statement loan, and then what's that other product you're talking about that can be used for like an LLC or something? Yeah,
the debt service coverage ratio loan. That is for investors buying investment properties. It's an amazing loan. Basically, the only qualifier is the rents from the property need to be covered, or the rents
so
from
it's
the
an
property
investment. It's an investment
product. It's only investment
So
product.
can you owner occupy with that loan?
No, you cannot.
Okay.
With bank statement, you can.
Bank statement, you owner occupy.
Yes, with as little as 10% down.
Okay, and then how much down do you put in the what was the other one? The
DSCR, debt service coverage ratio. DSCR is 20% down minimum. But it's a great loan. You only have to have the rents from the property need to cover the mortgage payment. And you can even go negative a little bit, but then the rate goes up a little higher. So it depends. Some investors will just take the higher rate. Other investors may come up with a little more down to get the payment to be covered by the rents to qualify that way.
So both of those are awesome. So what he's saying is if you've tried to get a loan as a business owner or for an investment property, and maybe you don't personally qualify with the conventional standards, you've got other ways to look at the income.
Absolutely. Okay. I mean, we've had multiple times where we've had people that are self-employed writing off a lot of income to save on taxes and not being able to qualify. The bank statement loan can be a game changer income-wise because the income flowing through your deposits, we just add them all up and then divide them by the number of months and then minus out a cost factor or an expense factor.
Question though, like if I was buying a property in like a living trust or something like that, do you have to use one of those products or can you do just like a normal home loan?
No, living trust is okay for most other products. We'd have to review it to see if it fits the guidelines for like conventional and FHA and things like that. So living trust is different than like an LLC. An LLC, we're lending to an entity, whereas a living trust might be that person is probably, the person we're lending to is the owner of that trust. So we're just really lending to them into their trust, and that's
so there's some verification steps.
Absolutely. We need to get a copy of the trust, review and see what the terms are, have our legal department review it to make sure it fits the guidelines.
Okay. So you can buy a home and put it into an entity through loan products that are available. And then you can also, if you're an owner of a business and haven't qualified conventionally on most loans, maybe there's a way for you to do that as well.
Absolutely.
So,
100%.
Thank you for being here.
Yeah, thank
In
you
the
for having
cold.
me. I know.
It's getting colder, I think.
I know it is.